The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Look, everything's working. You've got our charts back again. Everything's just cool. So, thank you to our host. Great programming. Let's see if we can keep that up all day. And the Dow is up 87 at 90,943. S&P's up 330 at 2,272. Actually, let me do this at the same time. So, because today I'd like to give you parameters. I want to show you what's going on here. So we have a very small short position in the Dow, mainly, I'm not going to call it insurance, mainly as a potential for this to be a double top with the technicals failing. It's really struggling. When you think about it, that since the middle of December, and we are almost the middle of January, what we're looking at is a struggle to break into the higher levels. The number happens to be 20,000. It's really not the issue. The issue was, actually, let me do this right now. The issue was that if you look at this chart here, I pointed out a long time ago that if in this rectangle, the schematic shown right here in this oval, yellow oval, with a long leg to the upside, made up of different legs, almost a straight up move to the upside. Then you've got this rectangle pattern, but within the rectangle pattern, there were declining highs. So on a purely theoretical basis, normally I would take from the high that broke out of the downtrend line right there, I do an extension to the upside, which takes you around about to 19,900. If you do to the rectangle, which is a more conventional way in the way I look at this as a propeller shaft one-to-one extension, but it doesn't always happen. It sometimes happens more to the downside than the upside. This is not like the Chapman wave stalk leg formation, because here you're using the 9-period exponential moving average, that blue thick line, as key support, and the 20-period has not. It's amazing. Since it broke out, this is very rare you will ever find this. Not in an index, not in the Dow, I should say, that there's a breakout on the 7th of November above the 20-period exponential moving average and the 9-period. But the 20-period, a much longer look-back period, you haven't yet even touched that line, which is at 17,799. It's nice and thick, but the actual number is 19,799. Now, this is really very important to me. You see the sideways move? You see the extension here that says 20,218? Between 19,900 and 20,218, got to get used to all these numbers. I could put in a rectangle formation and say probably the first part of that, which is the 19,900s, which we're testing right now, and I'll put it in right now just to show you. This is probably a realistic way of looking at resistance. There is extremely strong resistance, but you have at a high level consolidation. You have had the opportunity, let me draw this, I'll make this nice and big. In my webinar last night, I was talking about this pattern. You see this V shape or cup formation? Struggling to break out doesn't mean it isn't going to break out, but what it does say is, having had such an incredibly strong up move, this is a period where the resistance on so many levels, whether it is looking at a sector, whether it's looking at individual Dow stocks, whether it's looking, say, at the BKX financial index, bank index, you're looking at severe resistance. So the whole thing is, and what I had said, and I still firmly believe it, is that until the Dow breaks into and starts to close a number of times over a period of maybe 2 weeks, in the 20,000s. It could be 20,001. It could be 20,015. Once it gets there, then there's really no upside. The upside is more a matter of psychology than anything else. Why? Because all of a sudden we're looking at you're paying $2 for gas instead of $1.99. You know that whole psychology, that whole in the 1950s that began that whole thing. In fact, I once had a student of mine, not a market student, a clarinet student of mine, who was an economist at one of the major institutions, and he was a clarinet student of mine, and we became very good friends. And he told me that he was instrumental in the whole aspect of credit cards. There was a period where it was the layaway system, and he developed the system a long time ago where instead of having layaways, you could actually pay for it and then pay off that number, which basically was the credit card system. And he also explained to me that he was involved in many ways with the whole advertising aspect of going from a round number to keeping it in a single-digit number, 99 cents instead of $1. I always thought, man, Harold, you owe me big for that. Anyway, so this is 20,000. Once we get into the 20,000s and the media starts to say, Dow closed at 20,000. Again, the Dow closed in the 20,000. And the irony is that you've got a president that's going out of office right now who has seen the most incredible bull market in the history of the Dow Jones. And only last night in his farewell address actually mentioned it, sort of almost embarrassingly. Fascinating, isn't it? So now I'm saying to myself, okay, now you've got someone who's going to take credit for every 100 points in the market. Are we going to see one of the great bull markets? I think there will be a fantastic phase to the bull market, but I think that this is still what I call the coda phase. All right, let's get back to nitty-gritties. Dow's up 92. It needs to break into the 19,000. It needs to break into 20,000, and that'll be very positive. And all of a sudden, that'll be a peak G at 19,987, and this will be a brand new leg C to the upside. That's how simple I'm going to make it. Now, in fact, if it goes above 19,999.64 today or tomorrow, that'll be very good action. 20-period moving average, great. 9-period moving average flattening out, but it has acted as support, and so far it's trying its best to walk the 9-period moving average with 4 candles over the last 2 weeks that have been under the 9 EMA. It makes it very important right here. All right, let's get out of this. Let's go back to our nitty-gritties. What are we looking at? We're looking at the S&P, SPX. In the meantime, the Dow has very strong support in the 19,850 to 19,780s. Just looking at it on say, a weekly basis. The S&P walking the 9-period moving average, not so great. It's up 3.84. It really should be up 11. It's up only 3.75, only 0.17%. The Dow's up 0.46%, and the Nasdaq is up about 11%. Huh, interesting. All right, we'll be back and we go on with the numbers. And got a bunch of questions that I will answer that were in the den when I get back. Oh, and a lot of emails. All right, we'll get through these questions. Be right back. That's a bunch.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. This was mentioned here in the den the other day by Here in the Den. URA, it's a uranium stock, and ever since then, it's gone from the 14s to the 16.45 level right now. The weekly chart had a beautiful left side, right side price time match. It has an extension of the Chapman Wave falling axe formation. It went more than 1-to-1. This is the 1-to-1 right there. That takes, right to there. Let's see. And now it's way above it. That means it's in leg B. And then the other thing that was mentioned, because this is a student of mine, done almost all my courses, Chapman Wave methodology, said it looks like it's a Chapman Wave overlapping wave going to leg C. Well, this is URA weekly chart. The low is in week the 22nd of January of 2016, 11:31. Had a huge move to the upside at 16:04. Week of April the 22nd of 2016. Takes a long time coming down, and then it breaks out. And then what does it do? It does a little mini peak A right there at the week of the 18th of November of 2016. 1205 was the low, and it goes to 1263. Pulls back just 1 week and then starts breaking out above the 9-period moving average. Goes to a peak B on the week of the 16th of December at 1435, pulls back. And here it is, an overlapping wave, and that should take you to a leg D. That's the whole thing about an overlapping wave. And then the breakout of this level here of the 22nd of April at 1604, that becomes key support that should get tested after the move is completed, and that improves the monthly as well. Very nice. Congratulations. I must say that's exceptional action, and you're in it. And all I can say is, I kept putting it on. I don't think I would have bought it. Why? Because I would have wanted the close. I would have wanted a test of the previous day's close, and it just didn't do that. It just kept gapping up. So very nice. Now, a couple of questions. Let's see. Go back here. Basil, don't we have leg B in the Hindu with new highs several days ago? Aha. Yes, but it's a gray B. Let me just explain what I'm looking at here. That is a gray leg D/B. Why is it a D? Because the peak G/C from the all-time high of 19,987 back on the 20th of December made the cup formation, and the cup formation, when you've come there from an instant restart, let me go there. There's that peak D instant restart. You can anticipate that if it goes to a G, and last night in my webinar, I continued my explanation of how you can identify the chances of a good pullback from a peak G based on the MACD, the fast moving average of the MACD. But it said that there's a G/C. My thinking is that it would be a D, and that there was still a technical internal weakness, and that it's going to be very difficult to break out. So let me just go to something very much clearer. Let me just open this up a little bit here, and I can explain to you. So, Mr. Bill in the Den, there's your G/C, just a modest price pullback. It did use a lot of time, 1, 2, 3, 4, 5, 6, 7. 7 bars before at 19,718, back on the 30th of December, started rallying up. So what did I say? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. On the 11th day, it went to a fractional new high of 19,999. This started 2 days of pulling back, and now there's a strong candle, and we'll see where the candle goes, because if this candle breaks, as I said before, breaks to the upside, I'm not going to call it E/C. I'm going to call it C for a couple of reasons. Is that I'm sure that the stochastic will then be positive again, even though it's down at 67%, but it will be positive. And finally, you'll get the histogram starting to flatten out in the MACD, and that allows it at least to go to a D to the upside. Hope that explains it. So let's go on with our story. Good question. Very good question. Change. Got a question. I saw it earlier on. Basil, do we chase uranium stocks or be patient or not play at all? So Peaky in the Den, I'm going to say this. URA, I'll just run these through here if I can find the list of uranium stocks. This is an F/B. Everything about the MACD and stochastic suggests it's only B and that it should still go higher. I've found a long time ago, and I almost did that to a certain extent with some stocks that have broken out like this. I almost did that with telephone, and I didn't. Now telephone's on its way back down again. But there's only one way to do this. You can't get in with a full position. Oh, maybe you can, but your risk is really high. You're looking at URA trading at 16.47, up 87 cents. There's only one way to do this, and this is with a high-risk trade. It could turn out to be a very low-risk trade because it's now the momentum area, and therefore it should find a lot of support in any pullback. You can grab it right here at 16.47, but you can't get anything like a full position. You've got to get a small position, and the plan has to be you want to buy it at 16.45, saying, I would like very much, this is a different strategy to adding to your losing position to try to compromise, to try to create some kind of a lower threshold. This is different. You're saying I'm buying it at 16.47. I'm going to use the 9-period moving average of the 120-minute chart of 15.29, that area, to add. So you start here. You can have a little bit bigger position at $15.35 to $15, and that's the only thing that I would do right now. And that second position, the first position has to have the stop, doesn't have to. I would put the stop the same as the second position, and the second position would have a stop of 14.63, the 9-period moving average on the daily. That's the only way I would do it. I am anticipating that there is still weakness in the market. I want to see this whole thing play out by the end of the day. Could be totally wrong. The pattern that I'm looking at here, let me go back to the Dow. It's just a sideways consolidation. The technicals right at this moment. We've got to wait. This is a daily chart. I've got to wait for the entire day. At this particular point, the daily, oh, now it's only up 80. Yeah, the technicals are still suggesting that there's limited upside. There's still a lot of resistance, and I'm just going to deal with that. And as I say, we've got a small short play. Yeah, that's still just only a tad lower with all this action, and we do have the volatility index, and I don't want to talk about that because it's, in fact, the volatility is up from what we got when we went short via the volatility index yesterday on that rally. All right, so let's just go back to our story here. That's talking about, is that CCJ? Am I correct? CCJ? CCJ is Kamiko. No, JJC. JJC. Boy, all these J's. Yeah, JJC. All right. So that's in leg C to the upside, and that is the iPath Bloomberg. Oh, copper. Nah, we were in the wrong area. Sorry about that. I'll find it in a minute. Overlapping. Oh, you are CCJ. Yeah. Oh, Chemico is in fact the one to look at. CCJ, strong move to the upside. It's recycled A, B, C. I'm going to call this leg C to the upside. Same thing in CCJ. You can start here, but very small. Your biggest entry point would be 1175 or 1150. I'll be right back. Dow's up 80, S&P's only up 1. Next market.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm so sorry. I have to apologize. I usually try to show the 10-minute E-mini, what I'm doing, what I'm looking at, and I've drawn this in right here. And just going into the 11 o'clock hour, as I was starting my show, and folks in the den could see exactly what I was doing, and I thought I'd mention it. I don't think I did, but it was a peak F/C, and there was still action on the upside, and I had drawn in this left side, right side price time match, which goes to right here. It goes to 12 o'clock. Well, I drew the cup formation, peak C, in a shorter time frame, and I can't get to it right now, I put an up arrow thinking that there'd be one more pop to the upside, and we got that, and the pop to the upside was right there to test the 2269.25 high of the 10th yesterday at 1540. That's 20 minutes to 4. 20 minutes to 4. 20 minutes to 2. And what we're looking at is it went right there. The high was, in fact, it turns out to be 2269.50, and then it plummets down. Look at that move. It goes from 2969.50 down to the low so far of 2257.50. What a monster move in peak D. I mean, is that an example? Second peak Ds. This is an example of those Ds. Last night we were looking at them in the final webinar, my third webinar. They are archived, folks. If you're interested, I think there's just enough information there, regardless of whether you were getting my newsletter every day. Just in the actual course itself, the 3-webinar course, just a wealth of information to be able to use on a daily basis, on an intraday basis. I even showed the peak C1, C2 on a 2-minute chart, how it works, and it works on a monthly chart. These are techniques that are viable. A viable technique means it is you can use it on any time frame. That's really what I call a viable technique. So let's go on. We've got questions go right from the very beginning. GT asks about Whole Foods, WFM. Now, I'm fascinated with Whole Foods because we have two within a mile and a half of where I live. So I'm in, and both of them are really very different stores. One is smaller than the other, but they have different characteristics. It's like they run independently with a major theme that's the same, but each one can do different things. And I'm fascinated on how they're trying to squeeze out every dollar by adding counters that weren't there before, adding changing the venue of a particular place, having the some kind of a soft drink or a spritzer water placed over here now in its own special container. Fascinating. But the struggle, as my son said to me when he was here on Thanksgiving, we're at Whole Foods, he said, man, this is sloppier than I've ever seen it. And he had told me years ago about the Manhattan one, the one in, what you call it, Herald Square, is it? As you go over the bridge, Williamsburg Bridge, the one right there. In 1 week, that one particular Whole Foods, which is two floors, has more volume than you could look at many of the comparable stores in the country of any other make, of any other brand. And they just can, in 1 week, this thing does more than, in some cases, it was more than a month, but in other cases more than 6 months in that one store. It was unbelievable. There are lines. You remember? Oh, I don't know if I mentioned this at Trader Joe in Brooklyn the other day on Saturday. I think it was Saturday. Yeah, Saturday during the snowstorm. This is during the snowstorm. They had 23. It's about 46. Maybe it's more cashiers. 46 cashiers, and it's a relatively small store. The line circled in the inside twice. So in other words, there was the counter, and then it ran all the way from that level all the way back again. So call it one full time. It was actually more than that, but one complete rotation of the whole store before you could get to pay. And it paid very quickly. It was really a very quick line. And unbelievable. Can you imagine? Anyway, that's Trader Joe. Let's get back to our story. Dow's now up 11 at 19,868. S&P's down 4. Okay. So Whole Foods, the reason why I brought this up is that in the waveform, peak F was formed. Did I ever write that in? I should have. Maybe I always look at it and I type it in, and then 65.59 October of 2013. 65.59. Here we go. 65.59 was the high of October of 2009. I think that's what I said. No, I didn't. I said 2013. And it's been down since then. It's gone down to the 27s, 26, 27 area. Trading right now at 30.34, down 39 cents, making the H pattern after peak G, unusual peak G, in the weekly chart after a left side, right side price time match. That was a peak F, and it made this is the same pattern we're looking at in the Dow. It goes to, remember the inverted H pattern? It repeats over and over. It went above, couldn't close, and then it started to pull back. The rule of the cup formation is if you take out 1/3 to 1/2 from the lip, left side lip, to the bottom, there's a real good chance you're going to test the low. If you take out the low, in other words, if you close in the low, if you close below the low, in this case, 30.11, it means not only are you going to go lower, you could get a 1-to-1 to the downside. So be very careful. That's number one. That's the daily. The weekly did a peak D, a peak C minus on the retracement failure, and then it went to peak A, B, C, D in the last move up from summer of 2016 to December week of the 23rd. It went to 32.80. Now it's pulling back. The monthly chart is just not good. It's making an oval pattern. It's almost like an inverted stalk leg. I'm going to draw this in and we'll just follow it. So I think that Whole Foods is having a tough time. I have to commend them for the innovation. I have to say that at this point, even the stock market has pretty good produce. It has, a lot of things that can compete. You come out of Trader Joe with $150 worth of stuff, and you are set. You are set. You come out with $150 from Whole Foods, you'll be back in another couple of days. All right. So what we're looking at here is Whole Foods. I'd be real careful. What is the question? The question is, the question is SVU. I never look at SVU. Is that value? What is it? Super value? Yep, super value. Oh, look at that. Bad. I think there's a problem. There's a real problem. Besides the inflationary aspect, I think that the competition is huge. Huge. So, yeah, be careful. And what was the other one? Oh, wait, but SIG. Is that SIG? I can't see from here. Is that SIG? No, SIG. Oh, yeah, GIS is General Mills. Yep, SIG, same sort of thing. Yeah, it's trying to bounce off the gapping down. It's down 3.41 at 84. SIG trading at 84.03. No, be real careful in this area. This is not an area you want to be long. If you want to be short, you either got to, it's like the URA, it's like on the upside. Now you got to beat it on the downside. I don't do that with the downside. I find that support levels are hit very quickly, and then you have a bounce, and then you get taken out, and then it goes down. I would much prefer to have a bounce. If it was Whole Foods you were looking to short, I would say, yes, you could short it right here at 30.34, but I would have a 1.5 point buy stop. That's 5%. And the moment, if it can take out 30.0, if it can get to the 29.50s, lower the buy stop to your shorting price. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So let me just do this again. ESH17. That's the. So there was a tremendous slide. Now we should have a little bit of a balance. But look at that. That is just. I mean, that's nice, huh? Okay. The other thing is in the 10-minute chart. I did quite a bit of work on this earlier. I can't find the chart that I've got, but I'll use this. Gold. The reason why we're still holding our gold stocks, and I want to keep holding the gold, the miners and the gold stock we have, is because I think that the dollar is going to be under pressure. The way I'm looking at it is that the dollar, there's the dollar. So it went to a D, now it's gone to an E. This is the 10-minute. Let me just get this. I want to do the dollar right now. DXY. Nice move to the upside, but I don't know how long it's going to last because I think it's a high-level consolidation. And that's really what I'm looking at. This the pattern, the expanding wedge pattern in the daily, it held the low, and now it's bouncing. So that is a positive. I'm just thinking that maybe we're going to make, in fact, I'll draw it in here. Maybe we're going to make a rather long extended oval pattern as the dollar kind of trades sideways, chop, chop, chop. And gold has a chance just to make a little bit higher highs. And that's going to be the test for me. At this particular point, with peak Ds in the or E's in the 120-minute chart of the gold areas that we were looking in, I think that there's a digestive phase at this particular point. So this bounce now is quite important. 2 things are going on. One is within the dollar, the 9-period exponential moving average of 101.67 is holding beautifully. I was asked about the British pound, so I always look at the GBP USD. That's Great British Pound currency pair. Nice bounce in the, where is that chart? Let me see if this is the one. Yeah, maybe this is a USDG, no. Great British Pound, US dollar, there it is. No, I'm still not getting, anyway, very nice move. Look, leg A, leg B in the 10-minute chart, broke above all the previous highs, hasn't held, it has to hold above 1.21475. The high at 620 this morning. If it does that, I can start to extend this out a little bit. In fact, let me just do this right here. Let me find the candle most appropriate. It's this candle right here. And I'm going to do that. And now we get the right side. I don't know if I've done this correctly. No, I have to go. That's way too long. I don't like to do that. So the only way I can do this is to do it from the left side to the right side. And I'm going to do it like this here, and then this is going to give me, right, the low bar, take it to the inside there, extend it out. Oh, no, that was right. Okay. But we'll see. If it's going to move, it'll be moving very quickly, and it'll take this out in way quicker time. So this will say that by this afternoon, somewhere around 1:30 to 2 o'clock this afternoon, there should be, if this is going to move higher, it's going to get to 1.21 to 1.2172. Great British Pound USD currency pair should move to that level. If that's the case, I wouldn't be surprised if the dollar then starts to pull back a little. How can the dollar be going up at the same time? Anyway, that's what I've got. I'm a little behind on one of them. Okay, let's just do this because the question was, I go back to the ESH 17. Oh, giving it up again. Man, I tell you, volatility on a very short-term intraday volatility has been quite big. But if you look at it on the bigger spectrum, this is the most benign period we've had in ages. Question was ATW. I don't usually do that, so I'm going to go to the next one, which was WFT. WFT is Weatherford. This is a problem. Weatherford is not acting all that well. Weatherford International is the oil service, I believe. It's really kind of stuck at $5.60. Wow, $5.60. Isn't that funny? I remember the stock way back 40s and 50s. Yeah, right there. Look, way back at 49.98 was the high, June of 2008. Wow, how the mighty have fallen. Okay, so what we're looking at here is the question is, it was repelled at the 200-period moving average. That's the orange color. It was repelled at the 200-period simple moving average. That's this kind of light bluish color. I'm a little concerned, and I'm going to just say to you that that's not the better one. If I'm looking at the oil service sector itself, that's giving me a much better idea of what's going on. You see how the weekly, the 200-period moving average, you don't even need it. But when you do need it, you need it a lot, because what happened back in November of 2014, it dropped under it, had that incredible resistance, couldn't break above it, and then plop, came down again. There's this one-to-one to the downside. So now what we're looking at, we're going all the way from 2014 to a pop in December of 2016 to 36.35, the first time it's broken above that period. So now it's a magnet, but it's a repellent and a magnet. So I put a rectangle. I'm just going to say to you, the OIH, the Oil Service Van Eck Vectors ETF, is in a trading band, and the trading band has 3250 as support. It's at 3469 right now. And it has around about 36.35 as a resistance. It could go a tad high to 37. But I think it's kind of stuck here for a while. I hope that answers the question. Oil service, I wouldn't be shorting, but at the same time, you've got to buy the dips and you've got to be careful about short. You can short or get out of the rally on the upper end. All right, next question was GPB. I just did that. The EUR USD currency pair, the euro dollar currency pair, almost looks like the oil service here. It's just stuck in a range. And the weekly chart has come off the bottom. It's in a leg A right now. In leg A in the weekly chart, the MACD is trying to turn up. The stochastics at 15%, trying to get to 20%. I'm going to suggest to you, I'll give you numbers. Because you remember we spoke about the H pattern that goes to an M in the monthly chart. We also said the bar that takes out the left side low has only one bar, maximum 2.5 bars. This is a monthly chart, to climb and close back above the left side low. That's what it's trying to do. And that's another reason why I think that the dollar has limited upside, but it actually has a lot of support on the downside. That's why gold is acting so well under these conditions. And in fact, gold in a sense is also looking more like an inflationary type play. We'll see. Okay. So euro dollar currency pair, let's go to the 120-minute chart. That'll give me a little more information. Sharp pullback after making peak A, B, C, D, E, F, G. And then it goes to a rare breakout A, B. Oh, so that's, oh man, this is confusing. Yeah, so this is a peak C, a B minus, peak B minus. It's rare for a B minus to occur like this in this pattern here. But there's that cup formation that says, be careful. You can go slightly higher, but if you break 1/3 to 1/2 from the left side lip to the base, you can go all the way down, then go 1-to-1 to the downside. Well, we've gone not 1-to-1 to the downside, but sharply lower. So this is very important to break out above. I'll give you the numbers to look at. I can't because I hate this thing. 1.053531. I hate those numbers. Come on. All right. A close above 1.05663 in the euro dollar currency pair, the high that was made at 1 o'clock this morning, would be a big positive. anytime in the next day and a half, if there's a close below the low that was made this morning at 11 o'clock when my show started of 1.04533, watch out below. That's all I can say. No, I shouldn't say watch out below. It's just looking at the daily chart, it's just stuck. I should just grab this and say, hey, rectangle formation. You're in a trading band, just watch the levels, and that's all you can do. Whew, a lot of talking for nothing. All right, we'll be back. Basil Chapman, Dow's up at 11, S&P's down 2 3/4. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Don't forget your swimming lesson and all the others. What we've got today, what have we got? We've got swimming lesson, then you've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien, Wednesday today. Yep, great. It should be a great day for learning and education overall. So I was asked last night in my webinar about AGN. I said, you know what, I'll try to do it live tomorrow. So AGN, which is Allegan, has gone to a peak D with a silent doji right there, Chapman Wave silent doji. I didn't mention that last night. I mentioned silent doji as the one before, but I'll mention it right now. It's a technique that I developed where you're in a scan, you will never find it because it makes its D or E or the trough, but you don't see it because the doji is hidden away. It's on the left side or the right side, and that's what happened here. So Allegan is pulling back AGN to 16.73, down 454. And I'd say to him, we'll do it tomorrow. I think it's making a D, and it should be pulling back a little bit. But watch out, because 229.90 is the 200-period moving average. And if it takes out, if it gets anywhere into the 225.6, 226 area, then it should want to test that. But right now it's got the 9-period moving average. So that's on the daily basis. So 209, under 209, it says a deeper pullback. Otherwise, at this point, it's just sideways. The weekly chart is just a leg. This is a leg A to the upside, and it's on the 200-period moving average of the weekly. And the monthly chart, I said to him, I still think the monthly chart is very weak, so just be careful. I'm going to now do this. Maybe tonight I'll have a chance to do it. I'll do it again tomorrow because I don't want to run out of time. This is a good chart to look at. I just see no rush or anything to do. I wouldn't be shorting it right at this moment. Maybe at the end of the day I'll have changed my mind, but I think the MACD is just too strong. I'm not sure I'd be buying it either because of just the limited upside. So then I wanted to do AGN, and I'll do it again tomorrow. The other question was OKE, which is okay. We had a lot of work done on this some time ago. I can't remember if we had a trade. George from New York had brought it up and said he loved it for certain reasons. And we looked at it. I can't remember now if we had a trade. I should show it, but I'm just a little busy here to have a look. So I'm going to say that at this particular point, it's acted extremely well, but I think it's a little bit overbought, and it's going to take a bit of consolidation at 56.96, making a high, long-legged doji high the other day, and then breaking down from it on the 27th with 59.47. I'm looking at it, I'm thinking that it could go sideways a little bit. If it uses time rather than price, this is going to be a great stock to look at to go to a C and a D in the monthly chart. So let's just say, okay, I'm going to put on my list as well tomorrow. Remind me someone, we'll look at it again tomorrow. So that's what I want to do. Then other quick question was IYR. IYR is trading at, it's down a little bit. It made a peak, and that peak is going to be a question. Is that a right arm extension F? Is that a leg B, strong leg B? I'm going to just say to you, at this particular point, I would not be doing anything with the IYR. I'd prefer to hold off until Friday afternoon to get a weekly candle close, because this could just be, and this is what I think it is, it's just going to be an arch formation that's going to retest the lows in the H pattern after making an A Eiffel Tower straight up, straight down move to rare right on the 200-period exponential moving average. So I think we've covered a whole chunk of things. Let's just look at this chart one more time as we're going out. This is the ESH 17. Yep, nice bounce back. So it was an emotion sell-off. Now you're on the 200-period moving average. That's the blue line right here. I'm suspecting that this is that sideways move, that we're just doing an upper high-level rotational correction. We'll know a lot more about, I'm just going to say Friday afternoon at the close. I think that's the first real 2 weeks of the market that we can get a good sense of what we can look at in terms of parameters. So nice rebound after a sharp pullback in the E-minis. We'll watch this closely. Can I make a V-shaped recovery? Do we get to 20,000 this week? These are questions that we will know in the fullness of time. Thanks for being here. Stay tuned for great program coming up. Check out my opening call. I'll be right back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,